Hey, welcome. Today, we're jumping headfirst into a really fascinating topic, DAO treasuries. We're going to break down how these new, totally leaderless organizations are somehow managing billions of dollars. Our guide for this is the text Treasury Management in DAOs. So let's get right into it.
So let me ask you this. How do you manage a bank that has no bankers? It sounds like a riddle, doesn't it? But it's the real-world problem that decentralized autonomous organizations, or DAOs, are solving every single day. I mean, we're talking about massive treasuries with no CEO, no CFO, no board of directors. None of that. It all just runs on code. So how on earth does that actually work without falling apart?
Well, to really get our heads around that, we first need to understand the core idea here, which is pretty radical. We're talking about the concept of a leaderless bank. And just to be clear, this isn't just some new kind of app or a fancy bank account. Nope, this is a complete reimagining of how a group of people can manage money and power together. So what is a DAO treasury exactly? Think of it like a giant shared digital vault that lives on the blockchain. So it's out in the open for everyone to see. But the two most important words here are collectively owned and controlled by members. That's the whole magic trick. No single person is in charge. The community itself holds all the keys.
And this is where you can really see just how different this is. In a typical company, a handful of execs make all the big money decisions behind closed doors, right? In a DAO, everything is transparent because it's on-chain. Decisions bubble up from the community, not down from the top. And that leads to the biggest mind-bending shift of all. You're no longer trusting people, you're trusting the code.
But, and this is a huge but, trusting in code comes with its own set of absolutely massive risks. Because when things go wrong in this new world, they can go wrong in a very big, very public, and often very permanent way.
And that's the fundamental dilemma. You've probably heard the phrase code is law in crypto. It means the smart contract, the code running the DAO, is the ultimate authority. It executes automatically. But what happens if that law, that code, has a tiny flaw or a loophole? The results can be just catastrophic. There's no customer service line to call. There's no undo button on the blockchain.
And this brings us to probably the most infamous cautionary tale in all of crypto history, the hack of a project that was ironically just called the DAO. An attacker found a bug in the code that let them basically ask for money over and over again before the system could update its balance. They started draining millions of dollars worth of funds right in front of everyone. It was a brutal, brutal lesson for the whole space, and it showed just how fragile this model could be without ironclad security.
But here's the thing about this world. It learns, and it learns fast. Out of the ashes of failures like that one, a kind of survival guide has started to take shape. So let's flip the script and look at how smart, resilient DAOs are building treasuries that can actually last.
The successful DAOs today really live by three core pillars. First, and this is basic investing 101, they diversify. They don't just hold their own token and pray. Second, they act like a real business. They generate actual revenue, so they aren't just surviving on hype. And third, they are absolutely obsessive about security, building what's basically a digital fortress with layers upon layers of defense.
And to give you an idea of what that diversification actually looks like in practice, here's a sample model based on our source material. See that big chunk, 40%? That's in stablecoins. That's your safety net. It's how you pay contributors and keep the lights on even if the market is crashing. The rest is smartly balanced between growth assets like Ether or Bitcoin, investments that generate more income, and of course, a little emergency fund tucked away. This isn't just theory, this is survival.
Okay, so we've got a well-managed, diversified treasury. Fantastic. But that still leaves us with the big question from the beginning. If there's no CEO to sign the checks, who actually gets to decide how all this money is spent?
The whole process is actually pretty clear and structured. It all kicks off when any member of the community submits a formal proposal. It could be for anything: funding a new project, hiring someone, changing a rule. Then the community debates it, usually on forums. If there's enough support, it goes to a vote. And here, members use their special governance tokens as voting power. If the vote passes, the smart contract automatically executes the decision. Just like that, no managers needed. But let's be real, getting thousands of people to vote on every single little thing is a huge challenge. That's where two key groups come into play. You have your token holders. They're the foundation, the ultimate decision makers. But because voter turnout can sometimes be really low, many DAOs now rely on delegates. Think of them as governance specialists. They're people who do the hard work of researching every proposal, and other members can delegate their voting power to them. It's a clever way to balance that broad community control with really informed, active decision-making. Now, this whole system is so new, and it's changing practically every day. It's really exciting. So based on what we're seeing, where is all of this headed? What does the future of group finance actually look like?
First up, and this one feels a little bit like science fiction, is bringing in AI. Just imagine an AI that analyzes all the market data and suggests the best way to allocate the Treasury's assets. Or one that scans code for security risks before they can be exploited. The idea isn't to let a robot take over, but to give the human community superpowered tools to make smarter decisions.
And it's not just about getting smarter, it's also about getting broader. For a long time, DAOs were kind of stuck on one blockchain. But now, they're breaking free. They're starting to manage their treasuries across many different networks. This lets them tap into all kinds of new investment opportunities, and importantly, it means they're not dependent on just one single system.
And finally, we have to talk about the elephant in the room: regulation. As these DAOs get bigger and more powerful, you can bet governments are starting to pay very close attention. So the huge challenge on the horizon is figuring out how these decentralized groups can follow real-world laws without giving up the very thing that makes them special, their decentralization.
I want to end on this quote from our source material because I think it just captures the whole spirit of this movement perfectly. A DAO's treasury, it isn't just its bank account. It's a living, breathing reflection of that community's shared intelligence, its discipline, and its vision for the future. It's a huge test of collective responsibility. Thanks so much for digging into this with me.